At the heart of it for the banks is they are businesses, as well as having to look after their shareholders, of course. I suppose the question, it's more of a philosophical one, is how big a profit should they almost be allowed to have?
I guess if we have a look at the banks, what we are seeing are softer margins, a very subdued credit growth environment. And in this type of environment, they are struggling to maintain profit growth. And so what we're seeing in 2012 are the banks really starting to aggressively cut costs. And we've seen that through one of their largest expenses, and that's through staffing costs. We've seen ANZ coming out today to outline some of the staff costs that it's looking at cutting. And we've already seen Westpac coming out to the market earlier on in the year with their staff costs as well. And we're going to see this continue to be a trend for the banks as they try to at least maintain the same profit amount or increase profit growth, because their revenue, it's been difficult in terms of mortgages. They've pretty much been subsidising their residential mortgages over the last 6 months, as funding costs have been coming under pressure because of the European debt situation, and we've seen that for banks around the world. If we have a look at this move by ANZ, it was the first mover on Friday, but it now looks like it's been the smallest move so far, with just a 6 basis point move, taking its standard variable rate to 7.36%. We saw Westpac coming out with a much more aggressive move of 10 basis points, which Commonwealth Bank has matched today with with a 10 basis point move in its standard variable rate. But Bendigo and Adelaide by far has been the most aggressive, with a 15 basis point move to 7.45%. In fact, the only bank that has, listed bank in that financial space, the banking space, that has said that it's not going to move on rates has been Bank of Queensland. So we're still waiting on NAB. But remember, National Australia Bank gave its quarterly trading update last week, and there was a huge disappointment in the market. It was the worst performing Big Four bank of the week on that softer trading update, and this week's going to be a huge one. We see Commonwealth Bank coming out with its interim result on Wednesday, and then we see ANZ as well as Westpac coming out with quarterly results later on in the week. So the banks are under a fair bit of pressure, their margins coming under pressure, much more difficult environment to grow their business. So what we're seeing is them trying to maintain at least their margins for this year through increasing of the interest rates on their standard variable loans, and of course cutting costs, and that's going to be a key feature in 2012.
Banks was obviously a very positive one, helping to underpin what was I think a surprisingly good day in terms of the broader market, closing up almost 1%. Certainly didn't look like it as we approached the start of trade.
Look, we saw the US market down by 0.7% on Friday, so to see the Australian market rising 0.9%, a great performance. As you mentioned, it was strength in the banks which helped to underpin the positive performance by our market all session. But if we have a look at the morning versus the afternoon, a tale of really two halves. In the mornings, it was a lot of those defensive areas which were outperforming, and the gains on our market were driven by the likes of the telecom sector, the consumer staple sector, as well as the banks. But coming into the afternoon, our market really ramped up the gains a notch. And if we have a look at the intraday graph, this is what it looks like. And you can see really that ramp up came in the later half of the afternoon. If we have a look at the banking sector intraday graph, this is what it looks like. And you can see the banking space was behind a lot of that ramp up. But the Australian market also outperforming other markets around the region, outperforming the Kospi, which is up by about 0.8%, and the Japanese market, which is up by about 0.6%, and that's really because of the commodity space. The commodity space really coming home strongly in the afternoon. If we have a look at BHP Billiton, up by almost 1%, Newcrest Mining jumping by a massive 3.2%, and Fortescue, some takeover speculation there, helping the stock up by 5%. And of course, part of that story is a currency story. We have a look at the euro versus the US currency. This was one of the big things to move today, and that was on the back of that Greek austerity vote. So this is the euro versus the US currency from 7 a.m. this morning, and you can see it's an upward looking chart because most commodities are traded in US dollars. When we do see the euro strengthening, the US dollar weaken off, that's good news for commodities and good news for the material space.